people miss emails or just it goes to the side. A lot of times, how many times do you do this? I do it. Like I see an email and I don't click on it, or I even do click on it and go, I got to get back to this one,
Yeah.
and then all of a sudden it's like 2 days later and you don't even remember it.
Right.
And so if you see that email again, you're like, oh yeah, I'm so glad Ellis just emailed me again because I totally forgot about that.
Yeah. There he is. What's up, Todd?
Hey, there we go. I gotta unmute myself. I gotta turn my video on.
Act like you done. Act like you've been here before, man. Act like you've been
Make
here
it
before.
make it easy. I think that's key that you just said right there, man. If you just got to make it super easy. A lot of investors, they don't have time to read through all your stuff. They don't have honestly, a lot of them don't have time to even watch your videos, or they don't want to. They trust you, but they got just want to know a couple key points. Just feed them those few key points. Like understand what the questions are over and over again that everybody asks, and make sure that's presented right away, put in front of them their
I can't
decision.
agree more. I can't wait to show them these emails. Like they're so stupidly simple.
It's simple.
And like, and it works because exactly what you said. We think people need all this information, and someone just like it's a couple keywords of like, oh, refinance. Oh yeah, I want to do that. And then like,
Yeah.
how do they get in touch with you? You know what I'm saying? So,
And
you're
some
so
people
right.
do need all that information, but you're going to provide them with that.
Right.
But you got to provide the super simple, like,
Yeah.
boom, this is, I'm excited
All
for
right,
these
we're
emails.
talking. Let's get into. We're talking to an expert here. We got Todd Dexheimer on the line. Todd has been in this multifamily game since I was in the diapers. Okay, he's not
No
that
way.
much older than me, but he's been around for a long time. Okay, for sure, and a lot of experience. I mean, golly, Todd, how much you're managing what now? I mean, you've bought and sold a lot of deals, but what's
Yeah, we did.
currently
We,
there?
we sold a couple deals recently. So right now I think we're just over 50 million, 60 million, somewhere around there in assets. We sold two pretty big sized deals just recently. So that was
Man,
good. That was exciting, but
it's awesome to have you here. So let me just ask you some hard questions here, okay? Because we're talking about 506B, 506C. Um, the shifts that I had, and I'm still working through this a little bit. I was a pastor. I struggled personally, and this is why, like even this past week when we were able to raise those funds, it's just such a big like mindset shift for me because I struggled to really ask people for $1,200 a
yeah,
year to support our
yeah.
ministry, which was advancing the kingdom of God and changing the lives of college students in San Diego. And it was hard for me to say, hey, would you support us $1,200 a year? And now today we're asking investors to put up at least $50,000. And, it's just, it's a totally different thing. My question to you is, I see a lot of people going after the $50,000 minimum 50. Is
Mhm.
that too low? Like, are there more investors? Like, are we hurting ourselves by going after the 50,000, the one who can only do 50, when maybe it might be easier to go after the 200K? Have you thought about that? What's been your experience in raising money? I know you've done both sides of this equation too, but what do you think about the $50,000 minimum? Have you ever thought about just increasing that?
Yeah, actually, we almost increased it to $100,000 on our last deal. We ended up selling back down to 50. But yeah, there's something to be said about a higher minimum. There's also something to be said about a lower minimum. I think up until fairly recently, Grant Cardone was taking like $5,000 from people, and he was raising a lot of money. He was just casting a wider net. I know there's a fairly good sized syndicator. I'm not going to say his name because I don't know that he boy, advertises too much publicly, but he does $25,000 minimum, and he's raised many hundreds of millions of dollars at 25,000. But I also know several people that have a $100,000 or $200,000 minimum, and they do extremely well. Also, I think there's a couple things you got to really think of. First of all, who your network um, is really important. If you've got a network with a lot of high net worth individuals, $100,000, $200,000, probably not going to be nearly as big of a deal. If you've got a network with a lot of, middle class or kind of that in that lower echelon of accredited investors, $100,000, $200,000 might be pretty difficult. So you have to look at your network. You have to look at how much you're willing to do the K1s and all that kind of stuff, which quite frankly, there's a lot of automation behind that. So it's not that hard. Here's what I've noticed though, in my own personal experience. When I make my minimum $50,000, I get really about the same amount of investors as if I made my minimum $25,000. So if I've got a minimum of $25,000 and I got to raise $2.5 million, I need 100 investors, right? But if I double that, I only need half those investors, and I'm going to get pretty much the exact same amount of investors. That means I can raise about $5 million just by raising my minimum to $50,000. I will lose out on a few, not a lot, a few, by raising my minimum. But here's what happens. If I've got a $50,000 minimum, my investors come in, they're going to be at least $50,000, right? They're going to be more inclined to go to 75 or even 100. Where if I've got a $25,000 investment minimum, that same investor that would have done 50 is now doing 25. Okay. Especially the first time they invest with me. So somebody that's invested with me a ton of times, they're going to put what they want to put in. They're going to put 100, 200. They don't care what the minimum is. But if it's their first time investing and they just want to kind of check it out, just kind of put their toe in the water a little bit, they're going to invest the minimum. So that's something to be really cognizant about.
What I appreciate about that, Todd, and I think it's so good. A couple of things Todd said there: know your investor base, and if you really do want to, like if you want to help serve, middle class W-2 workers, who maybe folks who will never be able to hit that 200K echelon, know that, and I think that's right on, Todd, and I appreciate that distinction. But I want to make sure people get this point, because this is so, and there's a lot of great operators on this call. A lot of people have raised a lot of money for deals on this call. I still think there's a mindset shift, though, that you have to go through, because I still don't see this very often. And we still have a very sophisticated mastermind. You're in our mastermind as well, Todd. And so there's people there who are doing big stuff. But I still think we still have that same missionary mindset.
Yeah.
Sometimes. My biggest regret looking back when raising funds as a missionary was I never asked for enough. I never asked for enough, because here's the thing: when I asked for 1,200, I wasn't their main, no, $1,200 looking back, I'm I thought that was a lot of money. It was a lot of money to me. It wasn't a lot of money to them.
Right.
And I went on this investor tour back in February, and I got to sit down with some really high net worth people, 10, 15, $50 million. And when I said, I only did this a couple of times until I learned, when I said my minimum was 50K, it almost was like, why? That's not going to move the needle at all for me. 50K would do nothing because I would ask them this. I said, one of my questions was, how would this impact your family? And after a couple guys said, well, this wouldn't, I'm like, well, why am I sitting here? If I can't do something that won't impact you and your family for the next 10 years of your life, in a good way, and I don't have an investment for you that can actually impact your life, what the freak are we doing?
Yep.
And so it was just a mindset shift of well, why even do this then? And literally, so I was just well, now my minimum's 150 on that particular project, because I realized no one cares if it's 50K. So I just think helping people, again, make that shift at some level and who you're talking to. You also could be hurting yourself the lower you go, because for a lot of high net worth folks, 50K would never move the needle for them in their lifetime. And so I do think it's knowing who you serve and who your investor audience is, but knowing there's a lot of people out there on the other side. I'm just helping people move this. Yeah. I call it the missionary mindset. And I see that a lot when we're talking about raising capital.
So here's one thing. There's nothing out there that says you can't have multiple tiers, right? So here's what you could do. You're going, I'm a little afraid. I don't really know if I can go to a $200,000 minimum, or $100,000, whatever that is. Okay. Well, then why don't we do this? Why don't we try? Why don't we set up our next investment where we go, we're going to have 2 tiers, and I'm going to offer an A share and a B share. And my first share that I'm coming out is maybe an 80-20 split to the investors with a 7 pref. Okay. That's a $200,000 minimum. We're going to send that out to our investor list. They have an opportunity to invest. We're going to see how much we can get. Then we have our next share level that comes out later after this one, maybe not even expires, but after this one, gets to a certain point. That one's a $50,000 minimum, but it's a 70-30 split with a 6 pref. Okay. So if you want to invest $200,000, here's what you get. But if you don't, you can invest 50 and here's what you get. So you can still get the best of both worlds, right? You're getting rid of that fear that we're offering a bigger amount as the minimum. We're going, but we're too afraid. So we want to make sure we still got that 50.
Yeah, that's great. I love that idea. So are you doing 506C deals yet?
I've done, so I did a 506 C kind of, it was called a SCORE offering, SCOR. And what that allowed me to do is raise publicly to accredited and non-accredited investors within the state of Minnesota.
Interesting.
I could take money, investments from anybody, from anywhere, as long as they were accredited. But if they were non-accredited, I could advertise for them. Okay. I've not done a 506C offering. And one of the reasons why is I've got a pretty good sized network of very faithful investors that are non-accredited that put a good size of money into my deals. So we had 13 non-accredited investors on this last raise.
13.
13, yep, not 13. And combined between them, we got over $1 million. So, it was a pretty good size amount of money. Every deal, it seems like I get $1 million or more out of non-accredited investors. So I've kind of kept that open because I want those people to continue to invest. I really like the idea of them continuing to invest. Some of them are very dear friends of mine. So, and family. And so I want that to continue. So I have not done the 506C yet. It probably will come to a time where I will end up doing it. Here's the thing that I think people have to remember when they're doing 506C, that money just doesn't come in. You still have to do your job.
Yeah.
Right. And so I can go out and advertise, but I'm only going to get a few people from that advertising. I think more than anything, that advertising allows you to build your investor list that they'll invest in future deals. I would love right now to be able to blast out the deals I've got going on and talk about them and get people excited about them, because I know that'll bring more conversations to me and more people will comment and all that kind of stuff. But I would not expect any of those people to invest, or very few. Most people aren't going to make that quick decision. Some people will, most people won't.
Well, I think that's a good point, and you make a distinction there. And even what we've done, 506B and 506C, our 506C offering is a fund, meaning we are continuing to raise that fund up to a certain amount. But there wasn't a hard deadline, right? Yeah. So we could continue to talk about it, and that's why we did that, because anyone I talked to, then I could show them the fund. Versus our 506B offering, hard deadline, one asset. And just like you said, some guy I just met is probably not investing anyways. They've probably already met me. They're on my email list. They watch my, YouTube channel. They listen to my podcast. And so I think that's a very good distinction of the type of offering that you have. If you're doing a single deal and there's a quick deadline, the 506C thing, unless you're just a killer marketer and you know how to advertise it, you're not just going to go get new investors online from that.
Yep.
Right. Versus, but if you have something open, maybe a year, or it's a tranche type thing, I do think the 506C thing begins to make more sense, because you can advertise it's extended. You can bring new people into that.
Yeah. And I think that's maybe not the only way to go, but I think that's the way to go when you're talking about a fund, is because, as you said, like, Alice, you could go to dinner and meet somebody that wants to invest $1 million in your deal, but if it's a 506B and it's already out there, they can't.
Right.
They can't. Even if it's a fund, they really can't. You can't talk to them about it. There's so much gray area there, that I think you'd be putting that whole raise at jeopardy. Where it's a 506C, have a couple more conversations. Let's sign you up. No big deal. Like,
Yeah.
we don't care. We already know it. They just have to hit the accredited status. And if they got $1 million, to meet that status,
Yeah.
right? Where the B, quite frankly, we just haven't had the need to do the C, because we raise our raises, go really quickly.
Yeah.
And so we haven't had that need yet.
Todd, are you in a rush? You got a few minutes? I want to do two
I got a
things
few
before you get
minutes.
out of here today. You got a few minutes?
Yeah.
All right. First of all, you're in the mastermind. Tell
Yeah.
those who are not in the mastermind or listen to it. Tell me your experience. You've been in it since the beginning of this year. Kingdom REI. You were down in Orlando with us. Are you coming to Dallas? Can you get away?
I think I'm going to be there. Yeah. Yeah.
How's it been, man? Give me a little. I mean, being part of a mastermind, especially one like this, how's that helped you in your faith and your business?
It's been good. It ties the two together, which I think anybody who's a Christian um, is searching for, in my opinion, tying both your faith and your business and relationships all together. Uh, because, hey, we go to church on Sundays. We maybe hopefully we pray at home, and we maybe read the Bible or some other books, but we're not really openly talking about our faith to people. And so having this faith community has been huge. And then, of course, surrounding yourself with a faith community of like-minded people that are doing big things in real estate in the industry you're in, I think is also amazing. Anytime you can just surround yourself with people that are doing big things, that's super helpful. But then if we can surround ourselves with people that are doing big things that also have the same morals and values, and just are serving the same or very similar purpose, that's even better. So it's been great. The live event was awesome. With what and this is, you didn't ask me to do this prior to, so it's not like this is like I've been thinking about this or sponsor some sort of commercial or something. But with what you offer, Ellis, it's a steal, man. It honestly is. Somebody asked me about it, and they're like, "Yeah, it's a lot of money, though." And I'm like, "I thought so too," but once I got into it, I realized, like, you should be charging 3 times more, maybe even more.
Careful, there's mastermind members on this call. They're like, don't go 3 times.
But I'm serious. I mean, you
Yeah.
get so much value for what you're charging. It's really amazing.
Yeah. Well, it's my passion to bring people together. Abel was on the call and said he's done 5 deals inside of this mastermind already.
Yeah,
What's that worth to you?
that's the other thing. There's tons of opportunity to partner with people. It's not just learning, it's not just creating those relationships, but there's partnerships here too.
Yeah. Guys, the reason I asked Todd to do that is we have a preview night coming up August 1st in Frisco, Texas. It's live. Our members are going to be there. Would love if you're in that area to come attend or fly in. And if you want to plan to be there for the entire mastermind, we'll be there the 2nd and 3rd as well. I'll post the link down right now for you to go check that out, thekingdomrei.com/preview. And if you're interested, we can get on a call to see if you qualify. Todd, while you're here and got a few minutes, and thanks for sharing that, I want to actually show those emails I was talking about. And I want us to discuss, because we've both seen the emails that other people send. I don't know if I've seen all of yours, but I want to show you too. I want to show our folks, we just raised, and this is not, this is not a lot by any means. It is a lot from knowing where I've came from. We raised just over $1 million in about 5 days. And I just kind of want to show a couple of the sequences that actually helped us raise, like we needed to kind of finish some things up and share some of the stories, because I think one of the reasons there's a lot here, but when people send out emails and stuff, I get those emails and I look at those. I'm like, how could anyone make a decision based off this email? There's so much information here. I don't even know what button to click. Like, if I wanted to give you $100,000, I would not know how. And so I think some folks, if you're trying to really raise, there's a couple tweaks that I think could really help people who are currently in deals and currently raising money or looking to raise money in the future. And while you're here, I want to get your thoughts and kind of see how you're doing this as well. So let me pull up while we're here. I just want to show you two deals, and these were recent emails, and they worked really well. And I want to show you the two things we did here. Would that be helpful? I mean, is anyone still here? Actually, Todd, let's make sure people are still here on the call. Anybody still in the call and want to see this kind of stuff? All right, Jamet's here, Janice, Rachel, yes, Ken, awesome. Okay, so we got some people who actually want to see some of this stuff. Christopher's loving it. Great. All right, so Todd, so these are the actual emails that I sent to my investor base for a deal that we were working on. And here's what it said. The title of this email, let's see if I can find it, was non-accredited investors. So I'd already sent a bunch of emails. I wanted them to know this was a non-accredited deal. So that was the first subject line, non-accredited. And then I'd already sent them the webinar. I'd already sent them some stuff. I just wanted to get them to the point, and this was clicked on 35 times. There's two links in here. You can watch the replay, or you can download this 2-pager report. And I just want people to realize this got clicked on 10 times. This got clicked on 35 times. And just to Todd's point earlier, people don't have time to watch your video, but they're very still curious about your deal. And so I just said, hey, we got something open. Again, this is to my investor base. People already know. I gave them a real quick recap of the deal. But the thing I want you to point out is how short this email is. And what I said, I put a PS. By the way, PS is a marketing tip. People don't really care about your emails, but they will read your PS. And so I just, hey, if you don't have 45 minutes to watch the video, just check out this 2-pager. You're going to see the value in what we're doing. 35 people clicked on this 2-pager report right here of our deal. And in that 2-pager report, it tells them how to invest, kind of next steps in our deal. So that was one. Todd, you mentioned this about videos versus, do you do any 2-pagers or summaries of your deal? Ever did anything like this for your type of stuff?
Yeah, we do a summary. And so our summary is very bullet pointed. We're picking out some of the major things, and like in our executive summary, some of the big things that we think investors really want to know. A lot of the we get a lot of the same questions from investors over all of our deals. And so that's what we try to answer right away, just in bullet points. Boom, 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 boom. Like this is what's going on.
Yeah.
Short and sweet, right? The people that really like to dig, go ahead, dig. Yeah. Like we've got it there. But otherwise, it's right here.
So, and the other thing for this, Todd, I actually didn't even send out the large, you know how like most libraries will send out kind of their 15-page summary of the whole deal. I didn't even do that because what I have found is that when people it's just confusing. Like I don't want them to get in analysis mode. Like the only way they actually can get that in this deal is if they've actually made a commitment already, and then they go into our portal, and in the portal, then they can see the extended operating deck. Now, that may not be for everybody. I've just found that most of my investors are making a decision based on me and the overall thing of the deal. If they want more details, I'll say, great, make a commitment. Then you can do some exploration, right? You're deep, because most people have already made a decision emotionally. Remember this, guys, people don't make decisions with their brain. They make decisions with their emotions. So they've already made the decision, and now they need to justify it in order to make sure they're not crazy. Mm-hmm. So they make the decision, yes, I'm committed, and then I'm okay for them to go justify it. But I don't want them to justify the decision before they've made the emotional decision. And I think that is a key in this process. So that was one. I hope that's helpful for people listening. It should be a light bulb for a lot of folks. This is a second email that I want to share, and why I think this is important. So we sent this email out. This was just want folks to know how many emails I sent out. This is deal update number 7. And the reason that's important, two things about this. One, it's number 7. And The reason I send out multiple emails, one, we weren't raised yet. So if we'd already raised, I wouldn't need to send 7 emails. But I do think though, like, I'm not scared to send out more emails because people are busy. And every email that I've sent through number 7, I've gotten at least another investor. And the same investor saw or got email 2, 3, 4, 5, and 6 and still didn't invest. Couple reasons. My emails were going to his promotional folder. The subject line didn't catch his attention. He didn't know what decision to make. And so literally he called me on this email and said, "Hey man, I saw the refi email." Again, there's literally only one thing he can do in this email is text me. And so it was, "Hey, here's a quick recap. If you want to be part of this deal, text me." 10 minutes later, he gives me a call. And so, I'm not saying, "Oh, here's all the great information why we love this deal. Here's watch the webinar." Actually, I think I included the deal webinar if they wanted to watch this. But if you look at clicks, let's see how many clicks I got on this deal. Showing you guys everything. This is the best webinar online, I think. Who's showing this type of information? I can't imagine. So 6 people clicked this. So no one cares. Again, this goes out to 300 people 7 times. No one cares about the webinar. No one's watching the webinar anymore. Like, no one's doing that. What people want to know is, do I want to be part of this or not? And this wasn't for everyone. This was for the 1 or 2 guys that called me on this, and we were able to raise the last little bit we needed. So this is what all of my emails look, by the way. Like, they're very simple. They're very short. They don't have everything about the deal. I just want to give people one thing to do. Here's one thing that might catch them. And the cool thing about the different emails is I'll share different parts of the deal in every email, because someone might really like the refinance and hold. Someone might really like a cash flow perspective. Someone might like the city of San Diego and the location, and that causes them to make that decision. And so, Todd, I don't know what your emails look, but I think there's something. And again, I didn't come up with this. I just have been observing the guys who send me stuff and what I like and what I don't like. And what I have personally liked is just simplicity, man. Like, get to the point and tell me what to do.
Yep.
If this thing is 4 pages with 7 links, I actually don't know what to do. I literally am confused, and I probably don't invest. So your thoughts on this, man, now that we've kind of looking this together?
Yeah, I love it, man. It's simple. I love the fact that you're doing multiple updates like this to give them opportunities. Like you said, people miss emails or just it goes to the side. A lot of times, how many times do you do this? I do it. Like, I see an email and I don't click on it, or I even do click on it and go, I got to get back to this one.
Yep.
And then all of a sudden it's like 2 days later and you don't even remember it.
Right.
And so if you see that email again, you're like, "Oh yeah, I'm so glad Ellis just emailed me again," because I totally forgot about that.
Yeah. And you notice on that 7 one, I said, "Text me," because I'd already tried a couple things that didn't work. And so I just said, this time, like, here's my number. Like, how easy can you make it? Like, we try and make it so hard for investors to invest. I'm like, it's like, just make it simple. Want to be in this deal? Text me. Like, no, that's not, you can automate that too. It actually doesn't have to be your personal cell. That's our office line, but it'll still get them into, we'll gather their information as soon as they call or text that number. And so giving multiple ways and figuring out how do you make this super easy for investors is also key.
That's key. We're all busy. We're all busy. And people that have enough money to invest in your deals, they're busy.
Yeah. I mean, you know why? So why I'm not scared to send 7 emails. Is Andy still on the call? Andy gives me crap for sending too much emails. Where's Andy at? Yeah, Andy's still here. Good. Is that I was a missionary, and I would ask folks to come on my support team, and it would take them forever. They would be like, "Yes, $1,200, by the way, right?" So like, I'm working my tail off for $1,200 a year. If I ever go and become a missionary again, no one's coming on my team less than 10 grand, by the way. But it took me so much work, and I was like, golly, like, I thought they said yes, they want to be a part of this, and it would take them like 90 days to sign up for $1,200 commitment. And then when I transitioned from being a missionary to full-time real estate entrepreneur, and folks then approached me to support them, I realized, like, I felt back something like, I realized all of a sudden when a guy asked me, and it took me 2 months to actually respond to them, I'm like, oh, wow. It's not that people didn't care. It's just that people are busy. And if you don't stay on them and you don't remind them and you don't give
Yep.
them easy steps to get signed up, it's your fault.
Yep.
It's not their fault. They want to do it. They just need the easy steps in order to do it. And so that was a shift for me of like, no, it's actually my fault. It took 90 days for people to sign up because I didn't make it easy enough for them to get signed up right away. And they got too busy and they forgot. It's not their fault. It's my fault.
Your short, sweet emails are perfect too, because you open that email that's like a freaking novel, and you're just like,
yeah. Another thing, Todd, again, this is I'm learning. This is all stuff. That's why you got to experiment. 7 emails helps me learn a lot of things too. Number 7, I put their first name in it, and 5 people replied to me because I put their first name in it. And the 5 were, hey, no, actually I can't invest. But because it was personal, they actually felt obliged to say no.
Yep.
Where before, no one said anything. So things like that, I think, are those are
so
helpful things.
Let me ask you. So you sent 7 emails. I've never sent 7 emails, but I do send a couple. But when you have somebody say no, do you go through the process of taking them off of that email for the next one, or do they still get it? Because man, that seems like it'd be a lot.
No, I keep sending. Maybe they changed their mind. I mean, I don't know. Or they tell their friend.
It'd be a challenge to get them off.
Yeah.
It would just take a lot of time.
Yeah. If we actually really wouldn't take that much time, you would just tag them differently. But
Sure.
No, I mean, it's not like I'm sending them one every day. And again, my thought is maybe they're not interested, but they know. So like one of my emails will say, hey, maybe you're not interested, but who do you know? Yeah. Right. And so, because wealthy people know wealthy people.
And especially when you're doing that 506C, you can do that.
Yep. Yeah.
So I get that all the time, by the way. That's a bad thing about not doing 506C is like this last offering. Now we filled out almost immediately, so it wasn't a big deal, but I got several investors that were like, hey, I got a friend that really wants to do this, really wants to invest. I forward this to them. They'd like to invest, in this deal. Well, I mean, legally, technically, I can't take them because I don't know them. Right. So luckily I just said, sorry, it's full, because like I said, we filled out almost immediately. But if you didn't and you needed that money, you'd be very tempted to take that money, even though you shouldn't be taking it because you did a 506B. But if you did 506C, you could say, yeah, absolutely. Let's let them in.
Yep. So guys, we've learned so much. This call's been so good. I just, I love learning from guys like Todd, Abel. I love the 2 structure thing. I think we'll probably do that in the future where you're really incentivizing, folks who have larger capital. Because, and like, you see, oh man, I can get this, or there's a higher tier or structure. I want to be in that, even if I can't afford it. I'm like, dang, I wish I could put $250K in the deal. Yeah. And so I do think that's a really interesting technique, and I look forward to trying to figure out how we put that in. Todd, I just love this, man. Where do guys go to learn what you're doing and follow your deals and get on your list? And again, 506B, here's the thing. You don't know what people are doing if you're not on their email list. You can't see people's deals if you're not signed up for them. That's why I tell people all the time, get signed up, because if you're not, you can't see it. So how do they get signed up?
Yeah. Go to my website, venturedproperties.com, venturedproperties.com. I got a free book in there for people, all kinds of goodies. So you can sign up for that. And definitely, if you want to be on the email list too, connect with me there.